I would want to be silent a little bit, so that we can get to see whether there is any student who will be able to get this correctly. Let's see. Quite an easy question. Quite an easy question. Will they be able to get this correctly, really? Will they be able to get this correctly? So we have here Martha, who expects to receive US dollars a million in how many months' time? 6 months' time. The spot rate has been given as 122 to 123 Kenya shillings per dollar. Interest rate in Kenya is 8% to 10% per annum. Interest rate in USA, 4% to 5% per annum. Determine the amount receivable in Kenyan shillings using a forward contract hedging strategy. So we get so many guys calling you back and telling you know what, Mwalimu, the question had an error. The question had an error, really? Give us 5 minutes, we try. Then do it very fast. 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 What I said here is that the 6 months forward rate has not been given. And we shall therefore calculate it using interest rate parity theorem, because the examiner has given us what here? Interest rates of the two countries. Is there somebody who was able to think along these sides? Is there somebody who was thinking along these sides? Yes, thank you very much. And then, of course, you must have remembered then the formula. You must have remembered then the formula of getting the forward exchange rate. The formula of getting the forward exchange rate. You must have remembered this. The formula of getting the forward exchange rate. The formula of getting the forward exchange rate, you must have said forward equals spot into 1 plus interest country C, doesn't matter really, all over 1 plus interest country boy, like that. Can have boy on top of it, doesn't matter. So we have here the forward exchange rate equals the spot exchange rate, the spot exchange rate into 1 plus interest rate country C all over 1 plus interest rate country B. Ladies and gentlemen, please tell me, when you see this kind of a spot rate, which one is the buying rate and which one is the selling rate from the bank's perspective? From the bank's perspective, which one is the buying rate? We said, thank you very much, 122 is buy. We said you look at your home currency. Kenya shilling is on the left side. If the Kenya, your home currency, is on the left-hand side, you are aware that this will be buy and this will be what here, somebody? This will be sell. Buy and sell. So we know that the bank will buy at 122. Now let me ask you a question. Here we have this lady called Mother, right? She expects $1 million US. This money will be wired to her account in terms of a US dollar. She'll get the money US dollar like that. It will be wired to her directly. So you're assuming that Mother will be having this $1 million US kwa kibeti yake. Atatembea na kwenda kwa bank. So what role will the bank play here? What role will the bank play here? Buying. Thank you very much. And remember, this is what we said in our normal class, that if it is a receivable, Mother is going to receive. Mother is going to receive. If it's a receivable, then automatically the bank buys. The bank buys like that. And if it's a payable, the bank always does what here? The bank always sells. And this, of course, grounds our very important concept that I've always been wanting to sell to you here today. The one of what here? Foreign boyfriend. Our foreign boyfriend, in this case here, our foreign boyfriend buys what here? If you can remember this concept here. If you can remember this concept here. This camera is not okay. Wait, buys dinner. Is it buys food? Really? So foreign boyfriend. In this case here, will always buy what here? Will always buy what here? Will always buy dinner. Our foreign boyfriend. No, when we talk of foreign boyfriend, what are you looking at? We are looking at when it's a foreign receipt. When it is a foreign receipt always borrow what here? Foreign. Always borrow foreign. Whenever it is a foreign receipt, always borrow foreign. Whenever it is a foreign receipt, borrow, in this case here, foreign. And that is why we call this one here foreign what here? A foreign boyfriend. A foreign boyfriend is good. He buys, in this case here, dinner. He buys dinner. So when you talk of, ladies and gentlemen, here, foreign boyfriend, we are looking at foreign receipt. So anytime there is a question of receipt, always remember receipt, the bank buys. Always remember receipt, the bank buys. So then if the bank is going to buy, we've got no business with this 123. We've got no business with this 123. The 123 is useless here. So when we talk of spot rate, we shall be using this effective one, which the bank will be using. So here we shall be having 122. So we are saying in short that the spot here is 122 Kenya shillings per dollar, like that. Kenya shillings per dollar. Very, very important. Foreign boyfriend buys dinner. Very important. Listen here. So it is 122 Kenya shillings per dollar. The next thing will be for us to tell this examiner which one is a numerator country. Which country should we take on top? Which country is a numerator country? Which country is on top? It is Kenya. If you look at how we have written our spot rate out of this Kenya shillings per dollar, Kenya shilling equal juu. Kama Kenya shilling equal juu, inamaanisha automatically that Kenya is the numerator. Kenya is C. So you're saying that this C is Kenya and this B is the US. So then if that is the case, this is how our F will look like. Our spot here is 122 into 1 plus interest rate in Kenya. Listen. I love this. This is now becoming interesting. There is a time when they gave us this kind of a question. The students who got this right, I don't remember marking any. Those scripts are normally given to mark. You get like the whole of Nairobi, a certain sentence. Nobody, not even a single student, got it right. Listen. When you're given interest rates like this, which one between the two is the borrowing rate? Interest rate like 8%, 10%. Which one is the borrowing rate? Always the higher. The higher is the borrowing rate. Always the higher. So this one here, the higher. This one here will be the borrowing. And this, of course, here will be the investing or lending when the bank is lending to you, right? Or rather, when you give this money to the bank yourself, the investor. So this one is the investor's rate. Investors lending rate. Now listen to me very carefully. What have we said especially out of this? This is a foreign receipt. We are going to borrow foreign. I would want to make this thing clear. Very clear. Listen, allow me to draw this diagram. Remember here is always what here. Somebody, if you remember this table, is always borrow. And you have told me to borrow what here? Somebody, to borrow foreign. And then, of course, after I borrow on this leg, this other leg I will be investing. This other leg I'll be investing. So borrowing foreign Foreign in this context, mother is a Kenyan. Foreign is a US. So who can give me the borrowing rate of the US dollar? Somebody. Borrowing rate of the US dollar. Borrowing rate of the US dollar. Is there somebody who is able to see the borrowing rate of the US dollar? Borrowing rate of the US, it's 5%. Borrowing rate of the US dollar is 5%. Now remember, in Kenya, I will come and invest now in Kenya. What is the investing rate in Kenya? 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 Investing rate in Kenya is here. It's 8%. Kenya, 8%. Like that. So this is very important to me, because when I come here, I'm saying 1 plus interest rate in Kenya. Kenya, I'm investing. So here I should come and pick 0.08. I have to remember to prorate this. I must remember to prorate this. It's 6 months, remember. All over 1 plus interest rate in the US. Interest rate in the US is 0.05 times 6/12. So hapa lazima uende pole pole sana ndiweze kupata the proper forward rate. Ndiweze kupata the proper forward rate. Ndiweze kupata the proper forward rate. Hapa lazima uende pole pole sana. So if I'm the one doing this, this is what I shall do. I'll say 122 times, open brackets, 1 plus 0.08 times 6/12, I close bracket. And then I'll say divide, open another bracket for the denominator. 1 plus 0.05 times 6/12. And then you say equals. You say equals. You say equals. So according to Gladys, we have here 122, 123. You guys must really support me in this. We must understand this thing together. We must understand this thing together. Paul Macau at least got this. Paul Macau got this. Paul Macau got this. 123.79. Please, if you have to be very honest with me, how many of us were able to get this 123? How many of us were able to get this 123.79? If you have to be very honest. Nancy is dancing there. Thank you very much. 123.79 Kenya shillings per dollar. 123.79 Kenya shillings per dollar. I did. Thank you very much. Thank you very much. I can see all of you got it right. Thank you very much. So, and that is it. Now from there, remember you need 2 things for you to be able to do the translations. For you to do the translations, you need 2 things. For you to do the translations, here you need 2 things, and a forward contract. Under forward contract, this is what you need, 2 things. Under forward contract, you need 2 things. Number 1, the amount involved. Amount involved is $1 million US. Is $1 million US. Those are the amounts involved. And then number 2, we have the exchange rate. Now the 6 months exchange rate. The 6 months exchange rate. The 6 months exchange rate. The 6 months exchange rate we have here 123.79 Kenya shillings per dollar. So could you kindly go ahead and exchange? Could you kindly go ahead and exchange? Kindly go ahead and exchange. So it's very easy to exchange. What I'll do, I'll come and say 123.79 Kenya shillings equals $1. How about 1 million US dollars? How about 1 million US dollars? Could you kindly exchange there? Please cross multiply. Please cross multiply. They're not talking to me. 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 They are not talking to me at all. Right? So that is okay. That is okay. Thank you very much. Thank you very much. Thank you very much. So is it a little bit clear now with our video? Will you be able to? With our video, will you be able to follow? With our video, will you be able to follow now? Thank you so much. Thank you so much. Now, listen and listen to me. AFM examiners are mad, badly mad, badly mad. They're not like me. Me, I'm a nice guy, a cool guy, who will not even harm as a supplier, who will not want anybody to. A different approach got the same answer. That is by coincidence. You are wrong. You're wrong. Different approach. You are wrong. You're wrong. That's by coincidence. Now, ladies and gentlemen, this is what your examiner will do this time around. Listen. Listen here. This is what your examiner will do this time around. Listen. This examiner will come here and tell you glado, 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 intense, intense, to pay, to pay. A Ugandan supplier, Uganda shillings, 10 million. 10 million in 3 months' time. 10 million in 3 months' time. So what this examiner will do, he will come here. These examiners of FM, they are very bright, very bright. So what this examiner will do, the examiner will come here and they will be able to tell you, here something like this. 3 months forward. 3 months forward. Exchange rate. 3 months forward. Exchange rate. 3 months forward. Exchange rate. Be able to give you 3 months exchange rate, which in this case is 20 to 22. Uganda shillings per Kenya shilling. Great. And then we'll be able to come here and give you 3 months, 3 months, 3 months discount. 3 months discount. It'll give you here 5 to 6 cents. 5 to 6 cents discount. Like that. And then we are told here required how much will Glado pay in Kenya shillings, if she adopts a leading strategy. If she adopts a leading strategy. A leading strategy. The wisdom on the markets up. Thank you very much, Ogieto, for becoming so good. Why did I use Glado here? I used Glado because everybody here knows Glado. Everybody in this class knows Glado, courtesy of the typo. We shall overcome. Yeah, she's a Kenyan, isn't it? Great. Thank you very much. I can see what Grace Mudengi is saying. Grace ameshajua kwamba when it's a leading strategy, you will say no to any credit period. I don't want to enjoy your credit period. I would want in this case to pay today. To lead is to pay today. So you can see what this great lady is saying. Actually, it's only that nowadays I don't have a lot of money. If I had a lot of money, I would have given this lady even 1,000 shillings. She's saying that the first thing she'll do, because the lady wants to pay today, she'll calculate what we call the spot rate. Spot rate is what we shall use to pay today. So calculate the spot rate. Calculate the spot rate. Thank you very much. So do I do it or do I give you 1 minute to try it? Thank you very much. I can see students in this case here going for the low hanging marks. They are saying that the first thing they'll do, whenever they hear of cents, they will always divide them with what here? 100, because of percent, regardless of the currency. Whenever you hear of a cent, always divide by 100. But if I'm the one doing, I'll not even take this approach. If I'm the one doing this, I'll first of all establish the role of the bank in GLADO's assignment. What is the role of the bank here? Okay, I'll give you 5 minutes. Yes, I'll give you 5 minutes. But also remember, if you want me to be giving you this extra time to do these questions, you must be willing to attend many classes. You must be willing to attend many classes. Like tomorrow's class from 9 a.m. It's a free of charge class for the students who have paid this for this class. 9 a.m. We can even do 9 a.m. to 12, where I give you questions to try a little bit. I do like that. You will get a lot of experience. You get a lot of experience. So this person is saying that GLADO is involved in a paying situation. And if it's payment, the bank will always do what here? If it's payment, the bank will always sell to her. Don't even worry what the bank will sell to her. So long as it's just a payment, you just say the bank will sell. The bank will sell. The bank will sell. The bank will sell. Yes, you'll receive a video. The bank will sell. The bank will sell. The bank will sell. The bank will sell. But what? Okay. So remember, ladies and gentlemen, here that we have 2022, 20, and 22. So Kenya shilling is on the right. If Kenya shilling is on the right, it means automatically 22 is the buying rate. And if 22 is the buying rate, this other one here becomes what you sell. And you're the ones who have told me that given that the lady is going to pay, the bank will be involved in selling. So we know that then the buying column is useless. I shall do away with it. I shall do away with it. Now, what my students are doing, they are now trying to compute the spot rate out of this. They're trying to compute the spot rate out of this. So according to Lily, 20.05. According to Lily, 20.05. Lily is giving me 20.05. Even Atieno is giving me 19.95. Omar, my friend, we should meet with Omar one day, is giving me 20.05. We have 19.95. Whose story should I believe now? Because you guys are giving me different answers. Whose story should I believe? Whose story? Who is telling me the truth? Yeah. Who is telling me the truth? Thank you very much. It is a D's concept. We are using a D's. Whenever you see discount, always think about a D's. Always think about a D's. A D's means what? Yeah, add discount. Add discount. Add discount in order to get forward rate. 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 Add discount in order to get the forward rate. Add discount in order to get the forward rate. But you don't add like that in mother tongue. You don't add like that in mother tongue. You don't add like that in mother tongue. So we know that forward will be equal to spot plus discount. So the figure that we have here is forward. The figure that we have here is forward. Spot is what we are looking for, plus discount, which is 0.05. So therefore, spot would be 20 minus 0.05, which gives me 19.95. Which gives me 19.95. So is this correct? Is there anybody who got this right? Is there anybody who got this right? Now I know that is the most important thing. I can see Mayom raising up his hand. I would want to hear what Mayom you have by typing, please. I can see Nancy, the lady in red, dancing. Very good. The lady in red. The lady in red. A great lady in a wardrobe must have a red and a black dress. Great. Great. Never came across this. Don't cry, Grace. Now you've come across it, isn't it? Now you've come across it. So remember, these are Uganda shillings per who? Uganda shillings per Kenya shilling. So could you kindly go ahead and exchange? Could you kindly go ahead and exchange? Could you kindly go ahead and exchange? Exchanging is normally the easiest before I answer my own goal. So exchanging, we have here 19.95 Uganda shillings equals 1 Kenya shilling. Equals 1 Kenya shilling, the way it is written there. By the way, I rubbed mine here. How much was Gladys supposed to pay? How much was Gladys supposed to pay? How much was Gladys supposed to pay? 10 million. 10 million Uganda shillings. 10 million Uganda, 10 million Uganda shillings, like that. So then go ahead and cross multiply. When you cross multiply, what do we have? When we cross multiply, we have here 10 million Uganda shillings times 1 divided by 19.95. Then at the end of the day, how much are we getting in terms of Kenya shilling? How much are we getting in terms of Kenya shilling? How much are we getting in terms of Kenya shilling? Right? Is there anybody who got that figure? 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 Thank you so much. Thank you so much. So I can only answer one question. I can only answer one question. I can only answer one question. Unfortunately, I can't answer so many questions because we have so many things to do. As forward rate in the comma hapto. As forward rate. As forward rate. So then I'll need to explain that using a different answer, a different question. Kuja DM. I like what Ogero is trying to do there. He's trying to help me, which is very good. 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 Now, great. Now, ladies and gentlemen, remember, if for example we have Eliza, Eliza in this case here now expects to pay British pounds 5 million in a month's time. In a month's time. In a month's time. In a month's time, she expects to pay 5 million. Eliza is one of us. She's a Kenyan. This lady is a Kenyan. She is a Kenyan. Great. Now, in this case here, we have been given the spot rate. The spot rate is 145 Kenya shillings. No, 145 to 146 Kenya shillings per British pound. Right? And then they have gone ahead to give us the premium to answer you guys. I used 2 birds here to kill I want to kill 2 birds with 1 stone. So if you have a premium of say 6 to 8 cents premium, you don't write like this, that premium, right? And then we are required here to determine the amount, payable in Kenya shillings, if Eliza hedges forward. If she hedges forward. So remember, this premium is a 1 month premium. This is a 1 month premium. This is a 1 month premium. Is a 1 month premium. A 1 month period. You see, like these are very simple things. I don't even have a head. I don't even need to have been in anybody's class to understand this the last minute, because like between the two, I need to establish which one is the buying, which one is the buying. To know which one is the buying, always go by your position of your local currency, your home currency. The Kenya shilling is on the left side. The Kenya shilling is on the left side. If the Kenya shilling is on the left side, where your home currency is in, so this 145 is here, so you buy. This becomes the buy, and this becomes what you're the sell. And in this particular case, ladies and gentlemen, what will be the role of the bank? It's a payment. If it's a payment, the bank does what here? The bank sells. The bank sells. And if it is selling, then I don't have any business with buying. I need to come and cancel the buy. So I know I'm working under this column. And this time round, I have a premium. So if I have a premium, remember, I'll always remember here that it is RDs. Always add discount. But for premium, what do you do for premium? For premium, what do you do for premium? Premium, now you do the opposite, isn't it? Premium, you subtract. But again, you have to, don't tell me that mwalimu, just go and take this, subtract this. No, no, no. There is a formula. We know that forward in this case here then will be equal to spot. Will be equal to spot minus who? Minus premium. This time around, remember it is forward. We don't have forward, right? This time around, they have given me the spot. So the spot I should use, I've already canceled this. The spot I should use this 146, right? I say minus premium. Premium now on this column is 8 cents. So 8 divided by 100. Because whenever it is cents, so we must always divide by 100 to convert it to the big currency. So could you kindly give me this figure? 146 minus 8 divided by 100 gives me what figures and gentlemen? Gives me what figures and gentlemen? Gives me 145.92. 145.92. 145.92. We have here Kenya shillings per pound. We have there Kenya shillings per pound. So then could you kindly go ahead and do what here? But again, you have to be, you don't tell me that mwalimu always premium will subtract. It depends on what you are given. What if the examiner wanted us to get the spot? I would have written here, for example, assuming the forward was 146 and the examiner wants me to get spot. I would have written like this and then made spot the subject of the formula. Then I would have taken this to the other side. I would have taken this to the other side. So it depends on what the examiner has given you. Are you guys able to connect these things? Are you able to connect these things? Are you able to connect now these things? Are you able to connect this thing? That is the most important thing. And I hope now my home have answered you, because now my home thought that always whenever the examiner talks of premium, you must know it depends on what does the examiner want me to make the subject. So please go ahead and exchange. And exchanging, I believe now that is a walk in the park. I believe that's a walk in the park. Now, there is this question that I would want to repeat with you. This question that I would want to, I've done this question severally. I've done this question severally. The one that is now in the mock paper, I've done it severally. The one that is in the mock paper, I've done it not once, not twice. Premium per annum. No, PM inamaanisha premium. What to confuse it was sana PM. In this question, PM inamaanisha premium. So ukiweka pale premium PM, many people will think it's per month. Waanza kumapela 12 wananyoroshwa. Sio per month. Sio per month. Then the premium. The premium. Thanks for asking. Thanks for asking. But you see now we cannot stay in this one concept throughout. Can I go to the mock paper now? 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 So this mock paper, ladies and gentlemen, I have this question for you here. This is the question that I have for you. In this mock paper, this is the question that I have for you. I've done this question not once, not twice, not once, not twice, not once, not twice. Now, before I do this question, in this, I don't remember whether it was Glado or who, this lady who decided to leading strategy. What if she decided to lag? If it's a lagging strategy, what would you do? Be given 3 months and they tell you lagging strategy, use a 3 months forward rate. Lagging means paying at the end. So I'm repeating this again. If they tell you lagging strategy, always think about what year. If it's 3 months credit period given, calculate your money exchange using 3 months forward exchange rate. She'll pay the last day. Thank you. So come back here. I've done this question several. I even think I should not do it. I think I should not do this question. Let me just guide you. We are told here Nidwan Company is a UK-based company. Is a UK-based company. This question, they tested this kind of a question sometime back here and the students really cried. Why? Why did the students cry? The students here cried simply because of one thing. I'll tell you why they cried. I'll tell you why they cried in a moment. You see, like now here, this company is in the UK. And then it happens that, right, the payment or the receipt is being done in America. So now the rate was given, for example, like this. The rate was given, for example, I'm just giving you an example. So the rate was given like this. So we have, for example, 5 to 6, for example, UK pound, for example, $1. So now we have our students. So they went to an exam. They tried in this case to shake their hands so that they tried to shake their hands towards their home currency. So the home currency was not there. There was no Kenya shilling. And most of them really cried because now they said that, well, we could only shake the hand now at the middle. So what they did was to take the average of the two. There is no average in here. There is no average in here. You will always be told, where these people are based in. So like this company is based in the UK. So you reason like, as I don't assume this, but like a Briton when in UK. So UK currency, somebody is UK pound. So if, for example, this is 5 and 6, which one in this case here would be? Which one would be? You're buying currency. If you are a Briton now, Britain person, which one would be you're buying? Which one would be you're buying? We have this guy. The UK pound is on the left side. UK pound is on the left side, so 5 becomes the buying. Thank you very much. So don't tell me that you shook your hand at the middle. No, there is no that kind of shaking. So Paul wants me to send this paper. I had already done that long time ago. Now, ladies and gentlemen, we are told here 1 month expected receipt, $240,000. 1 month expected payment, $140,000. 3 months expected receipts, $300,000. The finance manager has collected the following information. So we have the spot. We have 1 month forward. We have 3 months forward. We have money market rate. Money market rate. This was an SEC question, but CASNEB took it the way it is and they just changed currency alone. So we are required to calculate the expected sterling receipts in 1 month and in 3 months using forward market. How I wish I could get better examiners. It's not a good exam. That's a simple question. Serious students. Calculate the expected. So I'll write there 3 months. Let me start with 3 months. 3 months forward rate. This exam is not even serious. 3 months forward rate. 3 months forward rate. So this is what I'll write there. 3 months forward rate. 3 months forward rate. And you guys now should start paying me something, because I'm promoting you guys to become international. Like now, Eliza, UK. UK. That is spiritual. That is spiritual. Lakini Glado, usiende Uganda. Uganda tumekataa. Uganda siwezi kuishi wenda Uganda na sister. Uganda, uko kitu mzuri Uganda kweli. So, nitakuja hapa uwe naandika 3 months. 3 months forward, 3 months forward, like that. So 3 months forward, like that. So in these 3 months forward, 3 months forward, 3 months forward. So I would need the 3 months, forward exchange rate. The 3 months forward exchange rate. They have given this to us as follows. See what this examiner has told me. The 3 months exchange rate, it's here. The 3 months forward rate is 17,846. 17,846 with a decimal here, plus or minus. We have 3 months. 0.00004. Like that. Great. I've picked if it's 3 months. I just decided to start with 3 months. Remember, I could also do what here, start with 1 month. But I just chose to start with 3 months because haina mambo mob. 3 months ni moja tu, haina mambo mob. Haina mambo ya netting, haina mambo mob. 3 months haina mambo mob. 3 months haina mambo mob. Sasa angalieni hapa. Abracadabra. Wanafunzi wakipata kitu kama wanachanganyikiwa. And yet wakisema plus minus kuna lower limit na kuna upper limit. So lower limit takuwa 1.7846 minus 0.0004, which will end up giving me what figure? Washapata already 17,842, 17,842 with a decimal there. And then we have upper limit. Upper limit now will be obtained by us adding. So upper limit will be 17,846 plus 0.004, like that. Could you kindly add for us? Upper limit to inakuja 1785. 1785. Thank you very much. 1785 with a decimal. And then now I can come and write my rate here. So my rate here is 17,842 all the way to 1.785 dollars per pound. Dollars per pound. Abdul alikuwa anauliza iko wapi rate? Abdul alikuwa anauliza iko wapi rate? Rate ndio hii hapa, abracadabra. Rate ndio hii hapa, abracadabra. Rate ndio hii hapa, abracadabra. Wamesema wapi rate? Unaona hapa nakwambia dola. Hapa wakatumia kizungu mingi per pound. So kwa hivyo inafaa kuwa dollar per pound. Ungeinterpret kwa hivyo kwa exam. Kwa exam ungeinterpret hivyo ama ingekuwa international disaster. Msikie kizungu ya per pound. Per pound. So kwanza nauliza mpaka hapo tuko together. Mpaka hapo tuko together. Great. Thank you very much. Sasa hebu tingiza mkono. Niambie baya ni gani? Tingiza mkono niambie baya ni gani? How I wish I would get this answer from the new students. Tingiza mkono. Don't tingiza mkono to nowhere. You know that your currency is the pound. Your currency is the pound. Yeah. So if it's on the right side, then this becomes buy and this becomes sell. Could you kindly, hey, you great students of mine, could you kindly give me the amount involved? How much money should I work with? How much money should I work with here? How much money should I work with? Money. What is the amount involved? In 3 months, hakuna kunet Karis kwanza siku imepotea sana Karis anapotea sana. Hakuna kunet 3 months in a netting, 3 months when the K. 3 months they have given us one figure alone. 3 months they have given us one figure alone. 3 months they have given us one figure alone. There is nothing like netting. 3 months they have given us 3 months. It's only receipt of 300,000. It's 1 month and 1 month here you can see. 3 months hakuna 2 figures. It's only 1 month. So 3 months it's $300,000. So in this case here, abracadabra, we are saying here that amount involved here, amount involved, amount involved 3 months, in 3 months, amount involved in 3 months is 300,000. 300,000 who? 300,000 who? So it is 300,000 US dollars receipt. So the moment I see this thing receipt, I'll define the role of the bank immediately. This niangalia vizuri, mnajua unaniangalia kwa umbali sana. Unajua unaangalia usingizi mingi. Ndio kwa umbali naanza kusema huyu mwalimu amekonda na mara nyingi za konda. Ndio unaniangalia kwa macho ya umbali, macho ya usingizi. Mbali. Wewe angalia vizuri. So receipt, the bank does what here somebody? Receipt. The bank buys. If the customer receives this foreign money, the bank will buy. So the bank buys. So if the bank is going to buy, so bank buys. If the bank is going to buy, then we don't have any business with this. This is as useless as hot air now. Right? So the bank buys at what here? The bank buys at $1.785 per pound. Like that. And then I'll go ahead and exchange. Hapa pia ndio utapata abracadabra, wanafunzi very bright wanaangukianga hapa. Imagine amekuja kutoka juu vizuri. Shetani anamkata mguu dakika ya mwisho. Shetani hapa kuwa mwanafunzi mwerevu. Tuota si werevu, fanya kimadha tangi. Useme $1.785 equals £1 equals £1. How about in this case here, 300,000 US dollar, 300,000 US dollar. So nakuja hapa we cross multiply. What do we have? We have 300,000 times 1 divided by 1.785 like that, which will end up giving us what figure? Glado gives me 168,067. 168,067. 168,067. The only thing they aren't telling me is whether these are their cows at home. These are their cows at home. What are they? What are they? What are they? Of course, they must be in terms of your local currency. Pounds. Pounds. Thank you very much. Thank you very much. So I'm so sure that all of us in an exam would have gotten this correctly, isn't it? All of us. All of us. All of us. All of us. Yeah. Yeah, all of us. All of us. All of us. Now from there, please go ahead and do what here? Please go ahead and do. 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 1 month. So 1 month ni mtamu sana ya 1 month. So 1 month apata kuna kitu. So 1 month, ladies and gentlemen, what are we doing? We shall come under net off. 1 month, we shall come and net off, because I can see there is a receipt of 240 and a payment of, so 1 month, I'll talk over 240,000 is positive receipt minus the negative. The negative here is 300, no, 140. So could you kindly give me this net? Because both figures are coming in a month. Both figures are coming in a month. Both figures are coming in a month. So inakuja mbesha shiga na. Mbesha shiga na. Mbesha shiga na. Sini 100,000. Sini 100,000. Ini $100,000. So is it a net receipt or a net payment? If it's positive, it's a net receipt. It's a net receipt, isn't it? It's a net receipt. So if it's a net receipt, I will be able to go ahead very first. A net receipt, I'll be able to go ahead very fast and say the role of the bank. I'll be able to go very fast and say the role of the bank. Role of the bank hapa ni gani? Abracadabra. Kama ni receipt. Kama ni receipt, ni buy. Bank will 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 buy. Great. Then give me the 1 month. Give me the 1 month. Give me the 1 month forward rate. Are you able to see the 1 month forward rate? Are you able to see the 1 month forward rate? Are you able to see the 1 month forward rate? Hebu tuanisha mnipatie ikiwa range. 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 Tuanisha mnipatie ikiwa hii ya 1 month. Tuanisha. Yaani kuseme hii minus 0.003. Haki wanafunzi ambao mimi narudia sasa ni wanafunzi wa usingizi. Sasa mimi nashinda wasaidiaje? Because I can see them. I can see them. Bara kunywa kahawa, wakunywa maji mingi kama hivi. Nikisema hata subtract hata nguvu ya kubeba hata kalamu na calculator ni shida. Now these last minute things, they really help. Trust you. They will help you. They'll help you. They'll help you. They'll help you. So ukiangalia hapa, like the lower limit, when you subtract, you get something 6. Let me see what these students are writing there. Let me see what they're writing here. Let me see what they're writing here. Wameandika hapa J Kamau 17,832. 17,832. 17,832. 17,832 all the way. 17,832 all the way to 17,826. To 17,826. Decimal like that. Decimal like that. Yeah. Kumbukeni kwa mekuambia kwa juu per pound. And because there are 2 countries, I per pound, the 2 countries, UK and the US. So najua itakuwa ni dollar, what ya somebody, per pound like that. So straight up, even without any reasoning, don't reason in these things. Don't reason. Where is your local currency? Your local currency is the pound. It is on the right side. So this becomes the buy. and this becomes the sale. And because you've just told me that the bank is buying, I've got no business here. So the bank will buy at $1.78 to $6 per pound. Like that. And then now go ahead and do what here? Exchange. Go ahead and interchange. Wamesema ni interchange. Wamesema ni interchange. You must arrange this in terms of lowest to highest. Haiwezi kaenda wewe Nick. Asante sana. Hata mimi sikuwa nimenotice hiyo kitu. I think usingizi pia imeanza sasa kuingia pande yangu. Sikuwa nimenotice. So they are telling me that the figures are correct, but it interchange. The figures are correct, lakini interchange. That's what they are telling me. Lakini makosa sio yangu, makosa ni huyu jamaa amejiita John. Hiyo nilisoma yake. Hiyo ni makosa ilikuwa yake, but life is all about learning. 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 Is this now correct? Is this correct? Lazima uanze lower limit to upper limit. Lower limit to upper limit. Thank you very much. So buy ndio ya juu hii. Buy na inakuwa ni low like that. And we have said here that the bank will do what here? Will buy. The bank will buy. The bank will buy. Now the bank is buying at. The bank is buying at. The bank is buying at. The bank is buying at $1.7832 per pound. Be like that. Thank you so much. So please go ahead and exchange. Go ahead and exchange. Go ahead and exchange. So go ahead and exchange. We are saying from the exchange that they have chosen is $1.7832 equals 1 pound. How about 100,000 pounds? Dollars, I mean. If you try cross multiplying here, it will be 100,000 times 1 over 1.7832. Niambie itakuja pesa ngapi? And then now the new students who are joining me for the very first time, given how funny I am, are you able to understand me really? Or you're wondering this cartoon of a teacher? Are you able to understand me, these new students? The new students only. Are you able to understand these things really? Are you able to understand these things? Wanafunzi wageni. But Mary was mgeni. Mary ni mwanafunzi wangu wa kitambo. We are okay. Patrick, okay. At least you're able to follow. That's the most important thing. That is the most important thing. Paul Makawe si mwanafunzi mgeni. Nilikuwa muuliza wanafunzi wageni peke yao. 56070 cartoon, yes. 560 something like that. Thank you very much. Now from there, let's go to part 2 of this question. So part 2 of this question is money markets, which I took a lot of time. I took a lot of time teaching you guys money markets. What do you think? Should I do this question, solve it here, money markets here, or can I give it to you, try, and then we have a look at it tomorrow? For money markets, because money markets, I really did money markets with you. This money markets here. The only trick here is that 4.9%, 4.6% deposit. This is supposed to be percent. And you can see deposit. The deposit should always be lower. Borrowing should always be higher. We're supposed to know that. Borrowing should always be higher. So they wanted us to calculate the expected sterling receipts in 3 months using a money market hedge and recommend whether a forward market hedge or a money market hedge should be used. 5 months. I always get students ambao wanasumbua sana. Ikwangi ati kitu tafu hivyo, ndio maana upatia marks 2, 3. Ikwangi tafu hivyo. So let me see what you guys have said. We try, thank you. The long process, allow us to try. So we shall try, and then ensure that please everybody, including the new students, because you guys were in some college studying. We try. Baburamo, everybody is saying we try. That's what I picked. Nobody, very few students said we do it. I believe if you try, and then we compare notes tomorrow, it will actually be more effective. It will be more effective that way. Don't miss trying this as your homework. Don't miss trying this as your homework. Now, thank you very much. Ladies and gentlemen, the other area that you cannot miss in the exam, the other area that you cannot miss in the exam is this concept of risk management. This concept of risk management, where basically you get an examiner giving you simple things like this. You can see cash flows in year one, cash flows in year two. They're saying copper company is concerned about the risk associated with our proposed investment and is looking for ways to incorporate risk into its investment appraisal process. The company has heard that the probability analysis may be useful in this respect, and so the following information relating to proposed investment has been prepared. However, the company is not sure how to interpret the results of an investment appraisal based on probability analysis. The proposed investment will cost Kenya shillings 3.5 million, payable in full at the start of the first year of operation. That is initial outlay. So Copper Company uses a discount rate of 12% in investing appraisal. Using a joint probability table, calculate the mean expected NPV of the proposed investment. Wow. What do you think of this question? What do you think of it? What do you think of it? What do you think of this question? 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 Oh, my voice is fading. What do you mean? You guys are not able to hear me. This is the second time I'm saying this. Voices. Thank you so much. Thank you so much. Thank you so much. This is a decision tree question. It's a decision tree question. Thank you so much. You guys are passing. It's a decision tree question, yes. It's a decision tree question. So can you take 5 minutes, ladies and gentlemen, and try answering this question very fast? Try answering this question very fast. Try answering this question very fast. Try answering this question very fast. Three more minutes. Just trying to frame down the question. Okay. Okay, thank you so much. I think now I should be able to do it. Great. I can see metering. Great. So let me draw it. Let me draw it. You see, hata kama ushikanishi chochote, hata kama hukupenda, yani ukisikia decision tree unasikia kulala. There are things that are quite easy for any decision tree question. Very easy. Low-hanging marks. Low-hanging marks. Which things are these, ladies and gentlemen? Hata kama sielewi chochote, najua decision tree lazima ianze na kabox. Money or the box? Lazima tuanze na box. Alafu nikuja niandike hapa ya finance kwanza ni rahisi. Hapa niandike oye invest. Hapa nikuja niseme do not invest. Don't invest. And I know, unless I'm a thief, I know if I don't invest, I expect to get what there? A zero. If I don't invest, I expect to get a zero. If I don't invest, I expect to get a zero there. I expect to get a zero. Now, when I invest, what do I expect now? When I invest, of course, there are probabilistic things, probabilistic cash flows that are really slippery, which I have to capture in a circle. So I can see year one cash flows, there are three. So we have here year one cash flows. There are three of them. Could you kindly give me the year one cash flows? Give me the year one cash flows. What do we have there? Let me just project my paper here. So the year one cash flows, ladies and gentlemen, that we have, the year one cash flows that we have, the year one cash flows that we have, the year one cash flows that we have are 1 million, 2 million, 3 million. 1 million, 1 million, 1 million. We have here 2 million. And then we have 3 million. 3 million. And then from there, we go ahead and capture year two. I would want to see whether there is somebody who has been able to capture year two very well. Is there somebody who can take their screenshot of the tree they have tried to draw and send it to our WhatsApp? Let me see how these guys have drawn their year two cash flows. Let me see how they've drawn the year two cash flows tree. Please, it doesn't have to be a very good of the very best of the decision trees, but just try sharing on WhatsApp. I'm waiting. I want to see. I'm waiting. I want to see. I'm waiting. I want to see now. I want to see now. I'm waiting. I want to see now. I'm waiting. I want to see. I want to see this. I just want to see some decision tree. Like I can see what Candy has. Very good. Very good. Because I'm so sure here, you will get students just coming here and they'll tell you, for example, just here, if year one cash flow is 1 million, they'll come and draw something just like that. And then they'll call you after exam. So they'll come and tell you that, you know what, Mwalimu, year two cash flows are here. Year two cash flows are here. Not knowing that, you know, we don't know exactly what the year one cash flow is. We do not know what the year one cash flows exactly will be. So in this case here, we are saying that if the year one cash flows, are 1 million there, when it comes to year two cash flows could either be what? Year two cash flows could either be what? Year two cash flows could either be, year two cash flows could either be 2 million, could either be 2 million, right? 2 million, 3 million, now 5 million, 3 million, 5 million. We have 2 million, 3 million, 5 million. We have 2 million, 3 million, 5 million. Now from there, ladies and gentlemen, of course, I'm so sure that all students here would have gotten this correctly. All students would have gotten this correctly. This is the tree that we are required to do. Probabilistic values come from a sample. Probabilistic values come from a sample. Probabilistic, you're not so sure of them, they're slippery. So could you kindly give me the probabilities of these values? For year one, is there somebody who is able to see year one probability? Somebody to help Mwalimu very first. Year one probabilities, what do we have there? Year one probabilities, what do we have? Year one probabilities, what do we have? 0.1, thank you, Paul Macau. 0.1, 0. Year one, 0.1, the second one is 0.5 and 0.4, thank you very much, 0.4. Then go to year two probabilities. Are you able to see the year two probabilities? Year two probabilities, are you able to see them? Year two probabilities, they're given on that table there. Year two probabilities, you have 0.1, 0.6, 0.1. Haiwezi kuwa hivyo wewe. Haiwezi kuadd to 1, 0.3, 0.6, 0.1. Ya kwanza ni 0.3, 0.6, 0.1. So we have here 0.3, 0.6, 0.1. We have here 0.3, 0.6, and then we have 0.1 like that. Thank you so much. Thank you so much. If we invest today, how much are we incurring? If we invest today, how much are we incurring here? If we invest today, how much are we incurring here? If we invest today, how much are we going to incur? We're going to incur 3.5 million. Thank you very much. Now, once I reach here, then I should be able to remember that I need cost of capital. And this was a bad examiner. This bad examiner has given us cost of capital directly. How can he do that in this era? He has given us cost of capital directly. What percentage? 12%. A good examiner should not give you cost of capital directly. If I'm the one setting this paper, what I'll do, I'll tell you risk-free is 10%. I'll tell you expected returns of the market is, for example, 13%. I'll give you, in this case here, beta of say 0.5, right? I'll give you 0.5 there. And then what I'll do, I'll come and give you, ladies and gentlemen, I'll come and give you gearing ratio. I'll come and give you gearing ratio. I'll give you gearing ratio of 0.4, gearing ratio of 0.4. And then I would want you to calculate cost of capital directly. This is what I'll do. I can't give you cost of capital at this level. This is a serious level. It's a level of, it's called advanced level. There is a reason why we call it advanced level. There is a reason why we call it advanced level, right? So I can't give you this directly. But of course, even if I try, in this case here, I'm twisting you a little bit, you are bright. When you see this and this and this, what do you think about? When you see, Hamadas, no, but thanks for raising it. Thanks for raising it. CPFM, isn't it? So the first thing I'll do, please don't write this. Don't write this. I'll come and mention that CPFM. And remember, this is CPFM for getting CPFM cost of equity, for getting cost of equity. So the formula that I know here of CPFM is risk-free plus ERM minus risk-free. Minus risk-free multiplied by what here? By beta. Multiplied by beta like that. I hope you guys are able to remember this thing. Multiplied by beta like that. That's CPFM, cost of equity. So the risk-free has been given here as 10%. We have expected returns of the market as 13%. Don't write this. Risk-free is 10%, and the beta of equity given here. Beta of equity given here. Is there somebody abracadabra who can use his calculator very fast to give me this answer? Is there somebody abracadabra who can use his calculator very fast to give me this answer? You say 10% plus open brackets 13 minus 10 multiplied by what here? 0.5. Multiplied by 0.5. What are we getting there? 11.5. Naomi, Naomi, the higher you go, the cooler it becomes. The higher you go, the cooler it becomes. Now, ladies and gentlemen, when they give you gearing ratio is 0.4, what comes to your mind? When they give you gearing ratio is 0.4. Gearing ratio, what comes to your mind? Borrowing, asante, borrowing, yeah, debt, right? Wakaka, right? Gearing ratio is the same as weight of debt. Gearing ratio is the same as weight of debt, which is 0.4. Therefore, weight of equity itakuwa 0. What here, somebody? If weight of debt is 0.4, weight of equity itakuwa ngapi? Shigana. The two must always add up to 1. Inamaanisha hapa itakuwa 0.6 like that. And then now I should be able to apply the famous wakaka. You remember the famous wakaka? So this wakaka is what we shall use as your cost of what here? Your cost of capital. What do you think of this examiner? 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 Is he a good examiner? An examiner who gives you this kind of approach for looking for cost of capital? Bad. What? I'll pass that message. I'll pass that message to Njuguna. Njuguna, Kasneb director, was my colleague long time ago. But they need to be a bit fair. But Kasneb is very fair. When I look at them, they're not badly off. It's students who are not really knowing how to harvest low-hanging fruits. They don't know how to harvest low-hanging fruits. And then most of them tend to panic quite a lot. They tend to panic quite a lot. I don't know why. Like last week or which week was this? I think last week, but one. I met one of them at the National Library. Until I had to cancel this lady. Akadijua sababu mwanafunzi wa online. Right? But nikimwangalia kwa kona huko naona ana change vitabu, nikiwa na change anaangalia ni AFM na kano nachukua tena AFR. You need a plan. When you say, for example, between this time and this time, you're supposed to be studying AFR. Walk through the plan. Ikiwa unasoma dakika 15 nakumbuka hii paper ndio iko na shida na hata elimu. Hiyo utakuwa confused. Utakuwa very confused. No. Hata ikiwa namna gani, kitu ya kwanza ufai kuogopa. AFM haipendi mwanafunzi mwoga. Ukiwa mwanafunzi mwoga utaanguka. You know, I normally see very many things. Especially those days when I was a young man doing invigilation, and I've always told you this story. I would go and get somebody like somebody who is of my age, a man. Unampatia karatasi kwanza ya AFM. I don't know AFM nafanya wanafunzi nini. Unampatia karatasi namna hii. Ukishampa sijui ni color, sijui ni harufu. Jamaa unaanza kuona sweat from the very wrong places. You know, you'd rather sweat from anywhere, right? Because hapo it's a bit hidden. But when a man starts sweating from here, wakati kuna baridi, unajua inapenda kunyesha wakati kuna mtiani, unaweza kuhapa. So kidogo unaona kalamu zimeanguka chini, unamuokotea. Kidogo calculator. Paka inabidi muite kando, mwambie mwanaume iko shida gani? Kwani must you pass? Is it a must that you have to pass? Is it a must? Kwamba lazima upite? Is it a must? Sasa at my age, kitu ya kwanza mimi najilipia fees peke yangu. Kwa nani amenikompel sana kwamba lazima ama ni bibi? Na kama ni bibi, si ile siku ya exam nitaficha ufunguo nitakuwa natembea ufunguo wa post office. Mimi natembea ufunguo wa post office kila siku nitakuuliza habari ya mtendo na video story tuache. Anyway, the point is, ladies and gentlemen, you need to be calm in the exam room. You need to be very calm for you to be able to see easy things. Because over 40% of your exam will be very easy. 40% of your paper will be very easy, right? Like how an examiner will just come from nowhere and he asks you, for example, to give like 4 functions of World Bank, and you get somebody returning a paper blank. Well, it's just a bank like any other bank. Like if today you went to Equity looking for a loan at Equity, these guys in this case here would ask you to give them business plan. So in short, they are helping you to run your business, although indirectly. They're offering some consultant service. So there's a concept of technical advice. They'll tell you, we can't give you the loan because you are seeing already your gearing is at that level. Come after 1 year. Continue in this case, you're doing this and this. Like that. So technical assistance, technical consultancies. It's a bank giving loans to member countries. So you see, those are things that you can only answer if your mind is very open. Not when you are sweating from here. You can't sweat from here and then you expect to pass. You can't. Trust you me. Right? And then, of course, the other thing which makes students here fail in this paper terribly, it is also what here? Time management. It is time management. You'll get a student, I don't know, for love of money market. They are there over 1 hour. What are you doing? This thing I'm guided with marks. Money market question is 5 marks. I can't take more than 10 minutes in that question. Right? I can't take more than 10 minutes in that question. Oh, no wonder now people are not asking for study leave because the pressure becomes what here? but you should never allow anybody. I'll ask for study leave, and if I fail, trust you me, so what? So what? Even those guys who are your bosses, perhaps they failed these papers 10 times. I'll even be the first one to take to them the result of my results I failed. You kill me. So what? The point is, I'm not wishing that anybody fails, but my point is that we have to get into these exams with a lot of confidence. Like, there are very many low-hanging fruits. Like now here, given that I have this cost of capital, I know these are fluctuating cash flows, I'll have to get PV for 12% year one. I'll have to get PV 12% year two, PV 12% year two. We have a lot of get together to do really. I can see you guys have nice stories. Yeah, perfection in a question carries skills. Never ever strive to be perfect in life. Never, never, never. In everything, always be the imperfect one. Try, of course, to improve your excellence levels, but never try to be perfect. Comes with that. Perfection comes a lot of what here? Price. Don't go for perfection. Don't go for perfection. Okay. So are you able to give me these figures? 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 So this question, I expect you to do it as well before we meet tomorrow. Before we meet tomorrow, you should have finished this question, and I would want to see you guys getting into WhatsApp groups, ensuring that you are really, especially questions that I give you to do in class here, ensure you do them. Don't fail to do them. Don't fail to do them. Yeah, in most cases, they mark answers. If you are wrong answers, wrong answers. Yes, but also low-hanging fruits. I've always seen these low-hanging fruits working wonders, right? And then ensure that if you have a very bad handwriting, like myself, my handwriting is very bad. So what I'll do, whenever, for example, I want to move from one question, like question 1, to, I can't write question 1 here, I write question 2 here. No, I have to skip like 3 lines, right? Because I would want my work to be seen, right? Whenever I get an opportunity to use a ruler to underline, I'll use a ruler, right? Because again, I know most of you fail because of what here, your handwriting. Your handwriting for accountants, I think it's next to doctors' handwriting. Worst. And again, that's also something you can change now. So what you do, try always to create spaces like that in between. And never ever should you skip a theory question. Theory questions, for example, if you are asked like today, what is the impact of the hustlers' fund loans to the economy? I mean, I'll write a ton of things. The impact of the hustler's loan, where somebody asks for money like this, is given money. What is the impact? Of course, I know it will be able to spur somewhat your productivity, right? At some cadre of citizenry. There are some people, if you give them, like there is one who was telling me one day when he was repairing my car somewhere, that if you give me today some amount like 100,000, you'll never see me here. I'll become, and the guy was so serious, right? So how comes you find kitu yoyote? So kuna hustler atapata 2,000, aende kane kuchoma whatever, ataweza, it will spur, of course, some productivity at some level. But again, remember, there are people who will simply get this money. For example, someone told me today, alipata 500 shillings. So 500 katakata inakuja kama 470, right? So unashangai for 70. Utakula na watoto wako breakfast. Hiyo pesa hii iishe. So at the end of the day, there'll be a lot of, not a lot, of course, I've given quite small, but there will be some areas, right, where you're having everybody, in this case, you're chasing, for example, after bread. You know, the production has not increased. The supply of money has increased in the economy. So we expect inflation to go up in the short term. Inflation will go up in the short term. The good side of it is that as we progress, now banks will be forced to lower their interest rates in future. If the government was to be very serious with this thing, but again, remember, entrepreneurship is not everybody will become an entrepreneur. there is a lot of water training to be done, right? But if people are to become like entrepreneurs using this concept here like that, then at the end of the day, as a country, we will go for. But it doesn't stop there, just giving money. Like, you have to cut on so many things. Like, now we need to sit down as a country and address this thing of water importation. We're importing too much. When we import, what does it mean? The pressure on the dollar, because you don't import with the Kenya shillings, you import with water dollars. The pressure on the dollar becomes very high. So the dollar becomes expensive. So our currency will keep on, in this case here, losing value. You're losing value. And because we are a net importer, we have what we call negative balance of payments. We are losing our wealth to other countries. Right? You know, if you are importing, and at the end of the day, your exports are more. Remember how we get balance of payments. To get balance of payments, we normally take exports minus what here? Imports. If you are importing more, then you are exporting. Like, most of these African countries are useless, starting with Kenya, right? Starting with Kenya, very useless country, right? Of course, we have potential, but you can't tell me that all along that we don't have any leader who will be able to come and tell us, hey, you guys, the problem falls where? Why people are unemployed today? Why Kenyans are unemployed today? It's because of what here? This thing. And I remember, like, there were these young men who were able to manufacture some ugly vehicles in Kirinyaga Road. Not Kirinyaga Road, but Kirinyaga County. And people were laughing at those people, right? They should have been encouraged, right? Because one of the biggest stuff that makes us really incur a huge bill is importation of motor vehicles. So if we can really have a situation where we tell all this, like if it is Toyota, now we do not want to import. Let us, in this case here, have this short-term pain and say, for example, we can't allow vehicles that are more than 5 years old to be imported. We bring the age down. You guys come and set up your vehicle assemblies in Kenya. Start manufacturing here. We have very good whatever in Kitui. Start mining those things. Because the moment we start working so hard on our production, then importation will go down. Our balance of payment here will improve. It becomes positive, and everybody will be happy. We'll be able to get these foreign direct investments, etc. Those are the kind of things I expect to see you guys making arguments in your theories. Relating interest rates to exchange rates, right? Exchange rates in this case here too. Why is our economy quite a tough one, right? It's because of what here? Some of these things like that. Some of these things. Great. So otherwise, I feel that, we began with some of you at 4:30 in the morning. I'm not now able to see very clearly, although of course I'm a strong man, but I'm not seeing very, very clearly. So I would want to meet you guys tomorrow at what time? So like now, tomorrow I'm not waking up. So tomorrow I'll be very energetic. An express of say 3 hours. 3 hours. So tomorrow at 9. And now so many of you are telling me again, you're not on leave. So do we push it to evening? No. Evening is too much. I would rather, is it now, we do it at 9? I'm even now confused. Do we do it at